This week has been wild for markets, with stocks selling off following a lot of the tariff news that we saw, as well as some weakening consumer outlook. And next week, we have a banger of a week with NFP, Jerome Powell speaking, and a whole bunch of services and manufacturing PMI data to hit the wire. In today's video, I want to take a look at where we are leaving this week off, at least at the time of recording this, with stocks making large sell-off moves, as well as gold actually joining the selling frenzy here today. Let's talk about all of it in today's video. Welcome back, guys, to the channel. If you could do me a big favor and just hit that thumbs up button and subscribe if you're new. As we get into today's video, I do want to mention kind of a pulse check of where we are. Now, please understand the markets are really volatile right now. So by the time you see this video, markets could have moved wildly one way or the other. So I'm just going to give you a general outlook view and mark up some levels that I'm watching personally on some trade setups that I'm watching for. So first of all, I want to start with the indices. So this was a pretty horrendous week for indices. The S&P 500 was just at its all-time high and has now traded at as far as down about 5%. We're getting the bounce here, at least at the time of recording this, but I really want to see how this candle closes today before we get any sort of confirmation one way or the other. If you get a really strong close today, perhaps the stock market has found a bit of a short-term bottom and we're due for a little bit of a bounce. But be careful, because in the last several days, we've had these attempts to move higher that have been met with immense selling pressure to end out the day. So I'm very curious to see how the kind of end of the day looks for this S&P 500 candle. The same story could be said when we take a look at the NASDAQ. I've been pretty adamant on my channel about talking about how I've been kind of out of the way of the NASDAQ for some time. Of course, that meant that I missed a little bit of the upside when we ran into those all-time highs. But if you were watching my channel at the time, I was mentioning several times that I was very cautious on stocks as they retested those highs. Since then, we have seen a precipitous drop in stocks across the board, with big losers being things like the Russell, which has really taken a hit. This one, by the way, from peak to trough is down about 13-14%, with kind of still sticky inflation in the picture and possibly some growth concerns coming into the scenario here. The Russell does not love that, as small companies kind of need the perfect environment. They need economic expansion as well as low inflation to really succeed. At least that's traditional thought on the Russell. And so while the Russell going into this year was something I was really bullish on, I kind of have to revise that and say I'm much more neutral at this time on the Russell, simply because, again, with sticky inflation, we have to be careful with this. On our CPI chart on the Edge Finder, we've added the target inflation rate. And what you can see here is that we've made these kind of big progress moves down, followed by several times where, inflation has kind of bottomed out and reversed course, going back higher. In fact, we have not yet made it even once in recent times to that target that the Fed holds so holy, that 2% inflation target rate. And so with inflation kind of backing up again, this is definitely a problem scenario for markets. High inflation means the Fed can't really justify cutting rates at this time. Today's core PCE number, if we could zoom in on this, Chandler, thank you very much, came in pretty much in line with expectations. So inflation for the preferred measurement of the Fed, the core PCE number, has basically, flatlined. We haven't really seen progress in either direction. So we are still, like I said, above that 2% target rate. And so, the Fed wants to see that really come down before they can properly cut rates. Here's a look at the dollar index, which has been putting in lower highs here and lower lows overall. Let's see if that changes next week with ISM services PMI, manufacturing PMI, and jobs data. It's a big week for the US dollar, because if you get really solid data next week, it could break out and kind of resume the longer term uptrend that we've seen in the last few months and even years for the dollar index. But if you get some weakness on those fronts, that would be a confirmed signal, in my view, to continue being bleak or bearish on the US dollar specifically. The euro dollar here is still kind of topping out around the 1.05 level. I'd be curious for those watching the euro as well to see if we can actually start putting in some kind of lower low on this one before really confirming that perhaps we have more room to actually move to the downside. But right now, a lot of dollar crosses are quite choppy and not making very decisive moves. One of the pairs that actually looks kind of interesting, however, is the UK, which, or the pound. The pound against the US dollar seems to be holding up decently well due to some of the more favorable trade conditions that Trump seems to be open to towards the UK, maybe omitting them a little bit from some of the hefty trade war or trade dynamics that the tariffs want to be imposed on some of the other countries, EU, Canada, Mexico, and China really getting kind of the short end of the stick, if you will, when it comes to tariffs. But perhaps this divergence could mean the UK, and specifically the pound, could do relatively okay compared to other currencies. In fact, the Edgefinder has sort of picked up on this. If we go to the top setups page, what you'll see is if I filter just for major and minor currency pairs, you can see there's a cluster of British pound currency pairs on the Edgefinder, which have been a signal the last several days and seem to be very strong readings overall for the Edgefinder. So I thought that was very interesting and worth mentioning. For those that have the Edgefinder, later today, the commitment of traders data will be dropping, and I'm very curious to see what institutional traders bought and sold on such a pivotal week. We had a huge amount of volume and a lot of volatility in the markets. The latest buys and sells will be updated when they drop to the public later today. The software will automatically pull it in and display it here. So definitely keep your Edgefinder open around 4 p.m. US Eastern time for the latest data, which will get imported into the Edgefinder. And if you don't have access to the Edgefinder, you can head over to a1trading.com/Edgefinder or speak directly with our support team using the first link in the description down below. On our website, you can also find out information about getting set up with a 30-day trial. We'll also have that linked in the description. Taking a look at the Japanese yen currency index, you can see that we've pulled back here a little bit with the gap lower on JXY, but momentum in my view still favors the bulls here for the Japanese yen. I remain in a short position on CHF JPY and also on a long position on TLT, which I've mentioned many times on the streams and videos recently, is a highly correlated instrument to the Japanese yen. Taking a look at Bitcoin, this is another indicator that I think is really worth paying attention to. Retail seems to be getting pretty beat up out there in this market at this time, with big selling pressure coming into, of course, kind of the king of retail instruments, if you will, Bitcoin. So big sell-off here. I'd be very curious. We may be due for a bit of a bounce. We've had a really sharp sell-off. If we do get the bounce, however, the question is, how does a level like 92,500 hold or break on the bottom side of this move, right? So on the top side, we had a lot of support around this area. Question is, if you get a rally going in Bitcoin, what happens at this 92,000 level? I've been saying it and I'll say it again. I do kind of still think that there is more to this risk off move in the short run. That's why, like I said, I'm positioned long on the Japanese yen, the TLT, which is bonds, and I am not short on the US stock market or short on Bitcoin, but I do think that it is very reasonable to think there's a good chance that this move, even if there is bounces in between, could see lower prices. Now, you know, here's the thing about the stock market specifically. I talk about this frequently. The reason I don't short US stocks or short Bitcoin is, number one, they tend to go up over the long time, and it is a very tricky trade with the style of trading I do. Let me explain. Typically, the way stocks sell off is very different than how they climb. When the stock market is rising or Bitcoin is rising, it looks something like this, right? Where you've got this mostly kind of steady overall upward momentum. Then when stocks and crypto or risk assets in general turn bearish, what we see is these very large intraday sell-offs followed by very sharp spikes back up. Then sharp sell-offs, sharp spikes, sharp sell-offs, sharp spikes, sharp sell-offs. Now, the reason that I find that to be a little bit trickier to trade with my style of trading, aka trailing stops and trying to let winners run, the difficulty here is that that dynamic is less favorable in this type of environment where it actually kind of favors taking quick profits. It's why they call it shorting, right? It's a short duration trade. I don't know if that's why they call it. I've heard people say that before. Maybe it is, maybe it isn't. But people are short selling and their idea is they're shorting it, they're borrowing the currency pair or the index or stock shares, they're borrowing shares from their brokerage and they're buying them back at a lower price in a short period of time. Basically, my idea here is that the problem is with my style of trading, let's say I'm trying I usually am looking to get in on pullbacks. A lot of times the move is so quick, by the time there is a pullback, the move is over, right? So you get these huge moves down, and let's say you finally are looking for a bigger pullback. That actually might have been it, and now it starts to trend up again. So catching those very finite short windows to the downside, if you catch that kind of move on Bitcoin, on stocks, it is incredibly lucrative. Ask anybody who is a good short seller, and they do exist. They're mostly day traders in the stock market. There's people who short sell, and they make a lot of money doing it. It's very difficult, but there are people who do it. It's just not my style. It doesn't fit with my swing trading approach. And for the most part, with a market that has been in a very strong uptrend the last few years, it's been very hard to find lasting short side opportunities on the higher time frames. So it's just something that I don't really do very frequently. And if I do actually execute short positions, I'm looking primarily for more prolonged bearish trends on higher time frames to take advantage of. Maybe there was some activity that could have been done in 2022 where you had a sustained bearish market, but at current levels and in a strong overall upward trend, I'm not looking to short. I just think that it's a prudent and fair thing to say, I'm going to wait for potential lower prices. If I miss them, I miss them. I'll look for an opportunity to get long. If you get like sharp bounces, some good news, and some good economic data next week, I have no problem admitting, okay, I can't catch the bottom. I'll just look for an opportunity to join the move if it starts. But where I greatly would benefit from patience would be, what if there is more volatility surrounding tariff news? What if we do get a large move lower and this continues to sell off for the next few weeks or months? Then I'll feel very, very smart for just being patient. So that's my way of quote unquote shorting, is I just stay cash heavy and wait. The other thing I do want to mention is when I'm looking at my system, which is the Edgefinder's top setups algorithm, which considers key data like economic reports and data, technical readings like sentiment and seasonality and trend, and then overall retail and smart money positioning. When I'm looking at all this stuff, I want to see setups starting materially to form in the top setups algorithm before I really feel comfortable executing positions. And right now you can see there are no US indices on the bullish or bearish list. Now, if we add in neutral readings, then of course you can see currently with, let's see if we can find it. Here's NASDAQ at a -1. So there's really not a strong reading in either direction for the NASDAQ. So that just tells me stay neutral, stay patient, wait for the right setup. And I've been rewarded in the long term by sticking to my system. Today is the last day to join our Edgefinder giveaway. All you have to do to enter, by the way, is click the link in the description to join the Telegram, drop your name in the hat using this giveaway link here, and maybe you'll win a copy, who knows. Again, the link to join the free Telegram is in the description below. I'd like to buy some more Tesla shares. That's something I've been talking about. I actually sold a put yesterday inside of our Discord. I sold a put at 260. So if this market continues to roll over, or if Tesla and Tesla goes with it, I would get assigned at $260 per share. That's something I'm willing to get some shares at. So I signed up to buy more Tesla shares if this market continues to go lower, which I think, you take a look at Tesla, look at this stock. I mean, this stock is down 42% from the highs. It's a pretty good correction already. So I like the stock long term. I like what they're doing with robotics, with the autonomous driving stuff. I think the cars are incredible. The battery business that they're in, to me, it's a company that is ripe for building into the future. But it gets overhyped. You had this massive spike on, oh my gosh, Elon Musk, Trump, they're gonna be best friends. I do still love the company, but I'm happy to see it dipping because it can actually give me an opportunity to buy some shares at better prices, in my opinion. So, not financial advice. Do your own research. I'm not here to tell you what to buy or sell. I do what I do. You do what you do. Do your due diligence. Be careful. Markets are really hard. You can lose a lot of money. Be safe. That is my opinion. I like Tesla on the long side. If I can get a bigger discount, I will probably buy some more shares. Or I will buy some more shares because I sold a put. If you don't know what selling a put is, I'm not going to go into the in-depth kind of nature of that, but when you short puts, you are essentially saying if I get put the shares, right, if it keeps going lower below 260, at any point it is at 260 or below, the person who bought the put can assign the shares to me, and they can close out of their position. I am willing to play the house in that regard and basically buy their shares at 260. So many traders don't know this, but a lot of trading profitability is dependent on you using the correct brokerage when you're trading. Remember that your trading costs are an input to your trading results. So what I mean by that is trading costs such as commissions and spreads and swaps and overnight holding things. All of that plays into your final results as a trader. And another huge thing that I cannot emphasize enough is you making a deposit into a brokerage account can earn you some significant trading perks if you use the right offer links. In the description down below, we have put together a collection of some of our partnered brokers that offer welcome bonuses when you make a deposit, free stock shares when you sign up, and access to some of our products for free. On our website, a1trading.com/brokers, that's a1trading.com/brokers, you'll see a list of free offers that you as a client to these brokers can get upon sign up and deposit. Do not make the rookie mistake of just signing up for any brokerage and not using a specific offer link. If you use our referral links, you'll get something out of it, and you'll also be supporting our work here on this YouTube channel. Thank you for watching. We'll see you next time.